Hey everyone, this is Kevin. Today is November 26, 2025, and we're going to break down the latest Tesla action. I'll walk you through how our last week's outlook played out, what we got right, what the market taught us, and then we'll map out the next 7 days so you always know exactly what you're doing. There's also some fresh market news today, and I'll weave that in as we go so the whole picture makes sense. Let's start with the recap. Last week, we highlighted one key idea. 387.83 is Tesla's midterm structural lifeline. As long as the weekly candle closes above that level, the midterm trend is still intact. And that's exactly what happened. Yes, Tesla dipped intraday into the 383s, but it closed the week back above 391. That means price tested the support, but didn't structurally break it. So that call, completely accurate. We also said that if Tesla reclaimed 415.52 on the daily chart, the market would flip from defense back to offense. And that's exactly what happened too. The moment Tesla closed back above 415, momentum kicked in, and we got multiple strong green days straight into the 426 area. So again, the strong weak switch at 415 was spot on. Our overall directional call was also right. I kept saying there was no reason to assume Tesla was heading into a major 3 to 5 week sell-off unless the structure actually broke. And the market proved that point. Instead of falling apart, Tesla held support and bounced. So the macro direction, also correct. But I'll be honest, one thing did need improvement. Last week our stop level was too tight. If you stopped out the moment price dipped under 387, you would have been shaken out right before the reversal. So that's something we'll adjust. Structure matters, but giving the market an inch or two of breathing room is just smarter. All right, let's move into the part you really want, the outlook for the next 7 days. And today's market also brought a few headlines worth noting. Nothing crazy, just enough to understand the tone of the overall environment. Here's the single biggest takeaway. As long as Tesla holds above 415 over the next week, this rebound is not done. It still has room to push toward 432, 435, and if that breaks, momentum can accelerate again. Let's talk structure first. Today, broader market sentiment was actually pretty supportive. Some big tech names showed early strength, risk appetite picked up, and there were a couple of bullish mentions from analysts about growing demand in certain high-growth sectors. Not Tesla-specific, but it helps the mood, and Tesla benefits whenever sentiment shifts toward growth. The first major support zone over the next 7 days is 415, 4 bondsfemin. If Tesla stays above this area, the structure remains strong. Any dip into this zone that finds support is healthy, not bearish. And with today's tone, analysts talking about tech momentum, stabilizing, and big funds slowly rotating back into growth. Holding above 415 would make perfect sense. The second important zone is 432-435. This is the key ceiling for the next week. If Tesla can break and hold above this range, the next leg opens quickly toward 447-452. And with fund managers today mentioning increased allocation toward high-growth names into year-end, a breakout here could easily attract trend buyers. The third zone to watch is 402-405, your defensive line. If Tesla loses this area, momentum slows down and the next 7 days become a choppy, range-bound environment between roughly 387 and 415. Not a collapse, just a slowdown. But as of now, probability of dropping into that zone is smaller. Now let's run through the 3 most likely paths for the next 7 days. The first one, and the most probable, is a small dip into 417-420, a bounce, and a push into 432-435. If it breaks, Tesla has a clear shot toward the upper 440s. This is the healthiest and most aligned with current market tone. The second possible path is a deeper dip into 402-405, followed by a recovery back above 415. This slows the trend, but keeps it intact. This usually happens when the overall market sees short-term hesitation or uncertainty, but right now there's not much evidence of that. The third path, the least likely, is a break below 402. If that happens, momentum stalls and Tesla shifts into a sideways or soft bearish pattern for the week. But again, based on current structure, that's not the main expectation. There are 3 risk points you should keep in mind for the next 7 days. First, don't chase the very first breakout if Tesla pushes into the 430s. Tesla loves fake breakouts at key levels, so you want to wait for a clean retest. Second, if Tesla breaks below 402, stop treating the chart as strong. Structure will have changed. Third, don't set razor-thin stops. Last week already taught us that. Let structure do the talking, not single-dollar price flicks. Let me wrap this up with the simplest possible summary. Hold 415, strong. Break 435, acceleration. Lose 402, shift to defense. If you just remember those three prices, you'll understand Tesla's entire direction for the next week. If you like clean structure, no fluff, and levels that actually matter, hit that like button and subscribe. I'll keep giving you the clearest breakdowns every day so you always know exactly what you're doing in this market. I'm Kevin, and I'll see you in the next one.